There are a lot of debate about whether digitization per se gives a return of investment to the bank. Are you doing it under pressure from your peers or other competitors, or you're doing it for valid capital investment decisions? So, in your own view, what do you think it is?
So there are two components to the ROI, right? So one is the cost drivers itself, and that itself we believe kind of meets more than the ROI, right? So to give you a very simple example, let's say a bank has 100 customers, right? And within that 100 customers, depending upon the geography of the country, and if it's a developed economies, the mobile adoptions are much higher. It's 50 to 60%, and as we kind of go to some different economies, it can go down to 30%, 20%, 10%. All of this happens. So let's say if you take a typical bank, even if you take let's say there's about for every 100 customers, there are adoption of about 30 to 35% adoption has been there. Now, once you kind of launch a new mobile app, how do you increase the adoption is the first strategy that the banks could typically look at. And just by increasing the adoption, moving it from let's say 30% to 50%, or 30% to 40%, 50%, whatever they feel is kind of achievable, that itself kind of SIG provides the ROI, because what is happening now, another 20% of your customers are not coming to the branch, they are more digital, and since your digital experiences have improved, they are trying to kind of shop more, do more with you, which was earlier not possible because every time they had to walk into a branch or to ATM to buy a subscribe to a new product. Right? So now, one is the cost reduction itself will drive the revenue. So one other significant impact, as we talked about during the course of our earlier conversation, is a lot of behavior has moved into digital, right? If not the older generation, the current generation is definitely moving to digital, and that too on mobile. And the moment you start giving great experiences on mobile, people will definitely come and buy more and more, right? There has been a study done by a research of American Express where people, 60% of the consumers said they will pay more for better customer experience, right? And then there was another study which was conducted by Timken Group, which said even large organizations as big as 1 billion, the moment they start investing in customer experience, they will see return of close to about 70% over a 3-year period, which means growth in revenues. So what we are seeing, there are two aspects to it. Right? So one is you're definitely seeing revenues growing, and revenues are growing both from existing customers, and because of the digital nature of these platforms, the moment your existing customer experiences are good, new customers are coming in. So which means your profitability is improving. So the moment the revenues are growing on one side with existing customers buying more, the profitabilities are also increasing. And finally, the cost drivers are also getting contained because more and more customers are moving to the digital channels. Now, to summarize, I mean, typically ROI banks have a cost to income ratio, right? So one is to look at aspiring banks, right? So typically every region, there are some banks which are extremely digital savvy who set as benchmarks in terms of how good they become digital. So one thing is to look at the fintechs and the e-commerce, where how they are delivering the customer experience. The other thing is in terms of the cost to income ratios, in terms of how you can kind of continuously keep improving it. Now you have a strategy here, and this e-commerce could kind of aid you in terms of improving the customer experience. And here you can have a strategy in terms of acquiring more and more customers or moving more of your existing customers into digital platforms. So effectively blending both on the cost side as well as on the revenue side, the ROI can be easily met by kind of implementing a strong digital strategy.